Mr. Uhuru Muigai Kenyatta.
There has been back and forth about the way forward for Kenya owing to the current political situation, with the calls for dialogue growing day by day.
The government and the opposition must sit together as leaders and show leadership to this country and remove the self from this whole scenario and talk about the interests of the greater population.
The Kenya National Chamber of Commerce and Industry has called on politicians to limit their battles within political parameters and avoid dragging down the economic performance with them. The effect is already being felt, with the smaller farms being cited as being among the worst hit.
Many of them are reporting huge losses. They are the ones who actually are bearing the brunt of this whole scenario.
This difficult situation for businesses is an aggravation of the mountain that is the difficulty to get loans for some, which is a result of the law that caps interest rates. KNCCI says that while the law is not a bad thing in its view, the suffering being borne by wananchi is the government's fault.
What is making the capping of the interest rates not work in this country is the government's appetite to continue issuing treasury bills and bonds, which saps out the funds that are available to the local borrowers, and that makes it very difficult for the local borrowers.
Banks have been calling for the removal of that aspect of the law, but the KNCCI holds that the lenders also have to stop being greedy.
Bank A was making 35 billion profits at the end of the trading period. So now that the interest rate has been capped, they are making 18 billion, and they are saying this is very bad. So they too need to manage their appetites, so that 18 billion is profit. You don't have to make the 30 billion in a depressed economy where you are
Dan Mwangi, NTV Business.
To a depressed economy.